Ladies and gentlemen, good day and welcome to India Pesticides Limited Q1 FY24 earnings conference call hosted by Dolat Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Tejas Sanavne from Dolat Capital. Thank you, and over to you, sir.
Thank you, Rayo. Good afternoon, everyone. On behalf of Dolat Capital, I would like to thank the management of India Pesticides Limited for giving us the opportunity to host their Q1 FY24 earnings conference call. From the management team, we have with us today Mr. D.K. Jain, Chief Executive Officer, and Mr. S.P. Gupta, Chief Financial Officer. Without further ado, I would like to hand over the call to the management for their opening remarks, post which will open the forum for a Q&A session. Thank you, and over to you, sir.
Thank you, Mr. Tejas. Good afternoon, ladies and gentlemen. I hope you and your family are staying safe and healthy. Unfortunately, our chairman, Mr. Agrawal, could not join this call because of some urgent, unavoidable circumstances. He has sent his greetings and apologies. I take the pleasure of welcoming you all for the Q1 FY24 earnings conference call of India Pesticides Limited. I hope you all had the chance to look at the financial statements and earnings presentation uploaded on the exchanges and our website. The agrochemical sector has been navigating through a challenging external environment which has impacted our operations also. Raw material prices are fluctuating due to increased overseas supplies, leading to pricing headwinds and increased costs of inventories. The price of technical products have also declined significantly. Our revenues stood at 2047 million in Q1 FY24 compared to 2217 million in Q1 FY23. We remain cautiously optimistic and are determined to tap into the opportunities presented by these volatile and uncertain markets. During the quarter, we have increased our technical capacity by another 200 metric tons, which takes our total technical capacity of 24,200 metric tons. We are focused on introducing new products and expansion of the Hamirpur plant project. Our recently launched products continue to receive positive response from the market and making significant contribution to the top line. This momentum has encouraged us to further enhance our offerings and explore avenues for growth and expansion. Our team has been relentlessly working on developing chemicals from basic stages and process to mitigate the impact of such situation going forward. We are dedicated to continuously sharpening our competitive edge by leveraging and further fortifying our robust research and development initiatives. To achieve this, we have earmarked substantial capital expenditure to support our R&D team in their efforts to produce high-quality products that meet the needs of our customers in various regions around the world. We have enlarged our team with 2 more senior scientists, and work on specialty chemicals is going on, and we are in contact with the premier research organization IICT Hyderabad for technological advice. As we grow, our commitment towards bringing chemicals which can substitute and limit our dependence on imports remains steadfast. This is also one of our many initiatives that aligns to combine our vision of Make in India and Vocal for Local to support domestic growth. We will continue to explore evolving opportunities for expansion as we strive to sustain business momentum. Our primary objective remains to establish a sustainable and resilient organization that remains pertinent to our clients' needs. Simultaneously, we aim to foster growth opportunities for our employees, generate profitable returns for our investors, and contribute to the communities we operate in. With this, I would like to pass on to Mr. S.P. Gupta, our CFO, to walk us through our Q1 FY24 financial highlights. Mr. Gupta.
Thank you, sir. Good afternoon, ladies and gentlemen, and thank you for joining the India Pesticides conference call to discuss Q1 financial year 24 results. I will quickly walk through our financial performance. Taking you through the financial highlights, the total revenue stood at 204 crore against 222 crore in Q1 financial year 23. EBITDA in Q1 FY24 stands at 26 crore. The PAT stood at 16 crore in Q1 FY24 as compared to 41 crore in Q1 FY23. During the quarter, companies saw pressure due to reduction in selling price of some of its products owing to destocking by overseas suppliers, leading to an impact of 17 crore. This impact comprises 7.3 crore owing to sales made during the current quarter, during the Q1 FY24, and 9.8 crore due to the revaluation of inventories at hand at NRV. The revenue from export stood at 84 crore as compared to 101 crore in Q1 FY23, and domestic revenue stood at 117 crore. It is similar as achieved in Q1 FY23. Demand environment in international market remained weak due to adverse weather conditions and inventory destocking. Revenue from technical formulation stood at 158 crore and 43 crore respectively during Q1 FY24. During first quarter, we invested 16 crore in capex for expansion of Sandila plant. Our capex outflow is 50 crore for FY24 for IPL and 60 crore for Salvage Specialties Limited, wholly owned subsidiary. India Pesticides Limited has a strong balance sheet with ability to generate good free cash flow. Company is planning to fuel its capex plan with internal accruals. Our cash and cash equivalents at the end of Q1 was 136 crore. We remain confident of continuing our growth trajectory while extending full support to our customers, supplier, and other valued stakeholders. With this, we would be happy to take your questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Rahul Jain from Credence Wealth. Please go ahead.
Thanks for the opportunity. Am I audible?
Yes, sir.
Thank you for the opportunity, sir. Sir, the first question relates to, yes, we have been going through tough times for last 3-4 quarters due to the external environment and aggressive pricing and dumping of products from China. So currently, as we speak now, 2 things about this. One is, how is the demand shaping up both on the domestic and the export front? And in terms of prices of various materials, both raw materials and the product side, how are the prices behaving now post the end of the last quarter? Have they stabilized? Have some of the product prices started moving up? If you could share some more details on the environment.
Rahulji, good morning. The external market still remains slightly subdued. The demand from overseas customers because of still the oversupply from China as well as weather conditions. And but in the domestic market, the demand looks to be good, but the prices are remaining subdued. And we hope that by this quarter, we should be able to, there could be some improvement should be there.
So have the prices stabilized or they are still falling post the end of the first quarter?
The prices are still slightly falling only, sir, because when we talk what is happening, that the customers, whenever you quote a price, they would like to quote a lower price. That is how the things are going on. And everybody is in wait and watch mode somehow, because they don't want to make their all the purchases at the same time. So they are buying in lots. So that is how the situation is going on now. But in one or two quarters, there is going to be a stability. It looks like that. And the raw material prices are also now getting slowly stabilized.
Sure. And on the inventory side, sir, we had roughly about, as on end of March, we had about 225 crores of inventory. A good part of that inventory was built with the upcoming Kharif season being there. So,
Yeah.
So how has been the Kharif season for us till now? And given the rains have been quite good in last about 15 to 20 days, where is the inventory position today overall? And how is the Kharif season gone?
Rahulji, inventory at the end of June quarter was 190 crore, down from 225 crore in March. And we are expecting that it will further reduce by 20 crore by the end of Q2. Demand from domestic has been very good.
Mm-hmm. And we expect further inventory losses based on the current situation to come.
So we are not hoping any significant losses, since we have provided for inventory as per NRB. Maybe 1 or 2% may be there, but most of the losses they have been provided for in this June quarter.
Unless there is further price revision.
Unless there is some significant price revision in August and September, which we don't foresee any significant reduction.
Sure. And sir, with regards to the volume growth, both in the technicals and formulation, how has been the volumes in the quarter one compared to last year and the previous quarter? I understand in your press release and presentation somewhere you have said the volumes are also have been bad and the prices also have. So if you could just split up the current sales in terms of volume and price erosion.
Yes, decline in sales has been mainly through volumes only. Prices, it has not dropped since our product composition has slightly changed.
Mm-hmm.
So
volume कितना degrowth होगा sir?
It will be around 8 to 10%.
And compared to the last year?
Last year.
And the price wala erosion is not much in our products. Is that what you said?
Because we have upper contribution from new product has increased, and new product has a higher selling price as compared to our earlier products. So per kg on blended basis, price has not reduced.
but individual product prices have come down, Mr. Rahul. What Mr. Gupta tells that the total volume what we sold and the revenue what we generated, the average price more or less remains same.
Sure. Just last question, sir. With regards to the new products which have been introduced, in the last year we did roughly about 120 crores of contribution from the new products in FY23. So in the current quarter, what was the contribution from the new products and what is the expected contribution in the current year from the new products?
The contribution from new product was 40 crore and we are expecting around 170 to 175 crore in this financial 24 from new products.
Sure. And if I could just squeeze one more. So what is the expected top line in the current year?
Top line, if the situation normalize in second half of current year, so we are expecting top line growth of around 10%.
Sure. Thank you so much, sir. Thanks for...
Because the product prices have come down, that is why the growth is slightly less than what we expected earlier.
So I'm assuming 10% top line growth is as the prices stand today, on today's prices, right?
Yeah.
Sure. Okay. Thank you so much, sir. Thanks for the detailed reply. All the best.
Thank you.
Thank you. question is from the line of Rohan Gupta from Nuvama. Please go ahead.
Yeah, hi, sir. Good afternoon, and thanks for the opportunity. Sir, a couple of questions. Sir, first is on our inventory markdown, roughly 17 crore, the amount which you mentioned. So, sir, what we understand that generally we have a pass-on clause to the end customer, and even the raw material is also procured accordingly in a backward calculating the prices which we have negotiated with the customer. So, I mean, generally we have a pass-on mechanism with the falling or the rising raw material price scenario. So, any particular reason that this reduction in selling price and even the inventory revaluation which we have done, roughly 17 crore rupees markdown losses, I mean, in an ideal scenario, in a pass-on clause, shouldn't be there, right, sir?
Rohanji, the full NRV impact is on the import substitute product which we have started making last year. The contract you are telling, they are with our overseas customer, that is for export. But this entire NRV loss is on product which we have started last year, Atmanirbhar Bharat, import substitute from China, and they are targeted for local market. In that territory, we do not have any agreement with local suppliers.
Okay, so basically if you are saying for the domestic sales, where the product has been manufactured, the global prices of the Chinese players have reduced the prices, and that's why we have to lower the, we have to take this inventory loss or hit on this product, right?
Because that season is concentrated from March to June, July, so we had to stock up the product for the sale. So that is why there was a stock build up.
Got it, sir. Got it. Sir, as far as our export business is concerned, we are not being impacted by any of the reduction in prices, and is our margin, because I understand even the raw material prices have also come down significantly. So do you see or do we expect that our per kg margins on which generally the export business is based on, that remains intact, or even the per kg margins have been affected in the current scenario in export market?
Sir, for export market, our margins are more or less same, because we have some major agreement with our customers, so there we adjust with the raw material prices, and so it remains more or less same. Maybe a very marginal effect may be there, but not at all in the export market. But domestic market, because it is a free float, so we have to go with the market price prevailing in the market.
Yes, sir, fair enough. And in export market, this is generally per kg margins which are fixed, right? Not on a percentage term.
It is more or less per kg terms. We have some agreement for our major supplies, and for smaller supplies, the price is varying. So there we have to make some adjustments.
Okay. And sir, for the raw material procurement, how much of our purchase is still coming from China of our total raw material requirements?
So we are still importing. We are sourcing our major raw material more than 65% from Indian sources, and around 30-35% is totally imported. From this, I think about 50% is from China and 50% from other sources.
Okay, so our dependency on China is still only 17% roughly on our total.
Yeah, that's true.
Okay. And sir, this Indian imports which we are doing, roughly 65%. So what we have seen that the raw material prices have fallen so sharply, and even some of the Chinese players and the Chinese markets and all were offering this product at the throwaway prices because of the huge inventory destocking which they are doing. So have we switched or have we taken the benefit of this opportunity in terms of reducing our imports from India and increasing the import from China, being opportunistic when the material is available at a lower price?
Sir, we because some of the intermediates we need to import from China, so that we have been doing. But what happened, initially when we imported, the prices were high. And after 1 month, if you want another import, then it is slightly lower. Like that, it is continuously declining. So we are always at the stage of higher cost inventory. That is what is the trouble.
Yes, sir. So that would have happened in last 3 to 4 months when the prices were falling.
Now I think it is bottoming out. That's what we feel. Now it is bottoming out. So that is why we told you that there looks to be some opportunity now that if we start buying the raw materials now, probably it should not go further down.
And when we think that the prices are bottoming out, and then the Chinese prices are still cheaper than the Indian supplier, and that gives us an opportunity to increase further imports from China, or we have to stick with the Indian suppliers only?
The upper raw materials, we are actually using basic chemicals like carbon disulfide and chlorine and caustic. They are available at far from China, or they cannot be transported. So we cannot substitute majority of our raw material from China. Where there is opportunity exists, we are importing. Even we have done some backward integration on a long-term basis. So we are producing instead of buying from China.
Okay, that's helpful, Sarojji. Sir, we have also talked about that we have improved the product basket, and that's why, despite roughly volume decline of roughly maybe 8 to 10% in the current quarter, our revenue decline has been limited to 7-8% only. So quite a remarkable job done there in terms of improving the product mix, and congrats for that. Just want to understand, sir, when we are improving the product mix, that definitely will be coming with the improvement in margins as well, mainly on a per kg basis. Adjusting for this current quarter loss of inventory loss of roughly 17 crore, if we adjust for that, our EBITDA margin is roughly close to 21%. That is still much lower than what margin which we used to do earlier at 27 to 28%. So do we see that our margin profile with the new product mix, improvement in product market, will reach to old level in terms of percentage margins of 25% plus, or you see that 20 to 21% is the EBITDA margin trajectory at which the company should be working now?
Rohanji, in our case, it is the reverse. What we found, our earlier product had lower prices and good EBITDA margin. Suppose earlier we were having a product of 400 per kg, our EBITDA margin was say 150 gross margin.
Yeah.
Now the product prices now they have increased to say 600, but Indian manufacturer they will still offer 150 per kg for gross margin. So what we are finding ki our higher price product they carry little bit less gross margin. But per kg, they are our Indian mindset is per kg conversion cost. What we have realized कि our lower value product they are having better margin than higher value product.
तो सर आप बोल रहे हो कि 400 रुपए के प्रोडक्ट पे भी 150 रुपए मार्जिन बनाएंगे, 600 रुपए के प्रोडक्ट पे भी 150 रुपए ही मार्जिन बनेगा.
यही है, 1000 रुपए भी वो 150 रुपए वहाँ का है. हाँ, तो आप लोगों का डिफरेंट, we have realized different thing. Generally,
but sir, then in that case, may our top line may go up, but in percentage margins it will only come down, because at 600 rupees it will be only, you can say 15 or 16% margin versus earlier 20 to 22% margin.
No, but our proportion of existing product will still be more than 80% if the demand improves in export market. So margin.
So but we expect to maintain the EBITDA margins of around 20%, and we will try our best to improve this further on. By proper selection of the molecules, we are in always search for molecules of some niche area.
Sure, sir. So just third thing we are talking
Mr. Rohan, I'm really sorry to interrupt you, but we request you to rejoin the queue as there are several other participants waiting for questions.
No problem.
Thank you. We move to the next question. The next question is from the line of Rohit Nagraj from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity. The first question is in terms of any new product launches in agro segment during FY24. Last year we have launched multiple products, which you also indicated primarily from the import substitute perspective. Any new launches which have been planned for this year? Thank you.
Rohit ji, yeah, we are planning to launch about 4 products this year, which will be consisting of 3 technical products and 1 intermediate. And apart from these, we would be launching a few new formulations also, more than 10 combination formulations in our B2C sales. And also, as you know, that our Hamirpur facilities work is going on there. So we would be launching our first product in Q4 FY24.
Right. And these 3 technicals, these are again import substitutes?
These teams, out of these, 2 are import substitutes and 1 is only for export.
Okay, right. Thanks. The second question is, last time you had indicated that we are working on a pharma intermediate as well as the stabilizers, additives, and new chemicals. So what is the progress on that, and when do we expect to commercialize these new molecules or new products? Thank you.
Sir, we are already working on this, and as I told in my opening remarks, we have already increased our R&D team by 2 more senior scientists specialized in this area. And we are also in contact with the Premier Institute IICT for technological advice. So, and most probably we should be able to commercialize this in FY25 first or maximum second quarter.
And these will be from the Hamirpur plant, right?
It will be, yeah, mostly from Hamirpur plant. Now, because with these few expansions, our Chandila site is now more or less full. So we will be expanding at our Hamirpur site.
Sure, sir. Thanks a lot and best of luck.
Thank you. The next question is from the line of Preet Malde from Centra Insights. Please go ahead.
Yeah, thank you for taking my question. I just wanted to get an idea on our working capital days.
Working capital days has reduced from March 23 levels by 20 days. Our inventory level has declined, and debtor days remain same. So it has declined by 20 days from March.
Okay. That's helpful. And have we faced any problems regarding sales returns?
No, there has not been any abnormal sales return. Nothing of that sort.
Okay, and I just wanted to understand which geographies do we mainly export to?
We export, sir, mostly to Europe, US, Australia, Japan.
Okay. So any geography that we majorly export to, a major chunk of our exports goes to that?
Major chunk goes to Europe, sir. European Union.
Okay. I think that's helpful. Thank you so much.
Thank you. The next question is from the line of Jainam Gilani from Swan Investments. Please go ahead.
Hi, sir. Thanks a lot for this opportunity.
Thank you.
Sir, could you tell me what would be the asset turnover for the capex planned at Hamirpur as well as for IPL?
Asset turnover, sir, we expect about 2.25 to 2.5 at Kandila as well as Hamirpur site.
Okay. And sir, just to add on to the question of our earlier participants, so what could be the margins going forward? Can we expect them to stabilize around, like, once they go back to normal 20 to 23%?
So, sir, we wish very much, and we feel that around 20% we should be able to achieve comfortably.
Okay. And so the revenue guidance was 10% for FY24. Would you be able to give any guidance for FY25?
25. Sir, we had planned for about 20 to 25% revenue growth every year. But now because the raw material prices have, the product prices have rationalized a bit, so we should be able to get from 25 at least 15% in FY25.
Okay, thank you. That's it from my side. Thank you, sir.
Yeah.
Thank you. The next question is from the line of Yogansh Jaswani from Mittal Analytics. Please go ahead.
Hi, sir. Thanks for the opportunity. Couple of questions have been already answered, so I won't repeat that. Gupta sir, you were mentioning about the 17 crore inventory adjustment, wherein 9 crore was the write-off, and the other 7 crore I missed. What was that amount, sir?
This was the amount on product we have taken NRV hit at the end of the quarter. During this quarter, we have sold products worth around 20 crore, and they were sold less than our cost price by 7.3 crore. The cost was 27 crore, but we have sold for 20 crore since price had declined in some product by 30 to 40%.
Okay, understood. So that is basically your inventory write-off.
Yeah.
So next is last quarter we had mentioned about product registration that we had got in US and I think a herbicide, and we had gotten a good client entry in it. So any further updates on that? How is that progressing, and what could be the potential going forward?
Sir, the registration what we got in US, now the company has already placed order with us for the supply of the product, and most probably from next month onward we would be starting supply for that. And this year he has ordered worth almost around 20 crores.
20 crores for FY24?
Yes.
Okay, got it. Sir, next, I think on our presentation, we have mentioned about under the expansion product launch that we'll be expanding in stabilizers and additive products. So could you just talk a bit more about what are these and just educate us a little more around it?
Sir, these are the stabilizers of common use as well as chemical stabilizers and additives what normally is being added to some of the products, not to polymerize and not to gel and anything. So those products are of very good importance. We saw good commercial value in these, and our team is working on that, and we are also working with, as I told you, the Premier Institute, IICT Hyderabad, and we would be cracking few molecules on that, and probably next year, next FY25, we should be able to commercialize that.
Okay. So, and this will be done under Shalvis, right? Or in the IPS?
Yeah.
Under Shalvis. Okay. Okay, got it. And so the last question from my end. So this 50 crore capex that we are doing in 24, what will be the breakup of this? I mean, where are we spending this money?
The 50 crores what we are spending in our existing site at Mandila, from these roughly 50% is for the two new blocks what we are building, one for an intermediate and one for technical, and remaining is for the infrastructure facility augmentation, because we are now going for 33 kVA power supply line rather than 11 kVA. So we have to spend, that will augment us from the power supply point of view, as well as there will be some reduction in the overall power cost. And similarly, we are augmenting our effluent treatment system by adding another multiple effect evaporator, which is costing almost 10 crores to treat our water, because our system is total zero liquid discharge, and we are increasing the capacity, so we require the augmentation of that.
Got it, sir. That's it from my side. Thank you and all the best with you.
Thank you, sir. Thank you.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from the line of Darshil Zaveri from Crown Capital. Please go ahead.
Hello, good evening, sir. Hope I'm audible. Hello.
Yes.
Yeah. So I think a lot of my questions have been answered. So I just want to know, with our new capex that's coming online, I think we are expecting around an asset turn of around 2.5. So for 110 crores, so we could expect maybe nearly 250 crores of additional revenue in the next year, or maybe it will take time to scale up. How would that journey be of our revenue of our new capex?
Sir, these capex, what we will be doing now, we will be completing by March 24, and some of it will be in infra, and we expect that this should contribute to us in the next financial year partially, and the full impact will be there in the next year.
Oh, okay, sir. So, sir, you've given a guidance for FY2024-25, but in a long-term basis, what do we see our journey like? Our path back to profitability, higher profitability that we had, and revenue growth of 20-25% would come back in FY26, or maybe it's just too market dependent right now? How would you quantify or qualify the journey that we are having right now? Is this a year of consolidation and we can see non-linear growth going forward? How would it be, sir?
Sir, consolidated growth, what we have planned is, sir, more than 20% for a long-term basis. This year, because of these very wavering situations in the overall market scenario, the revenues are slightly fluctuating. But on the long-term basis, 20% growth we already planned for the coming 5 years.
So maybe in FY23 we might see a higher growth that can compensate for lower growth.
Yeah, certainly. Because when our expansion funds fructify, then obviously they will contribute more to our total revenue.
Okay. So that's great to know. And sir, our margins, as you said, with the new products, maybe higher value, we are not getting the exact percentage terms margin. So our new normal margin would be around 20%, or that would also become better as going forward, or how would it be?
Sir, the overall margin would be around 20%.
Oh, okay. That helps me a lot, sir. So all the best for the future results. Thank you so much.
Thank you.
Thank you very much. A reminder to participants that you may press star and 1 to ask questions.
If there are no more questions, we can stop.
We have one more question. The next question is from the line of Ketan Athavale from Robo Capital. Please go ahead.
Hello. Thank you for the opportunity, sir. I just wanted to know what do you say when this destocking situation will get better? By how many months, as per your estimate?
Right, very difficult to tell, a very difficult question to answer. I think you would have asked even in some other companies' conference call also. It is very difficult, but what we feel, probably this destocking should be over by another 3 to 4 months. Because the companies, what they have, the overstocking, they would have got rid of their stocks by that time.
Yeah, okay. And then, so by then can we get to 20% margin level?
Yeah, that's what we feel. That's why we have. What we estimated is that this quarter it may be slightly subdued, but from next quarter onward, probably we expect the margins to improve upon.
So for FY24 as a whole, you will be still slightly below 20, right? Or will you reach 20 for whole year?
20 is very difficult to tell. As on today,
it will be in the band of say 18 to 20%.
Yeah.
Okay.
Because market is becoming very volatile nowadays.
Yeah. And then you said that by the end of Q1, the prices were still slightly falling, right?
Yeah, that's what we feel. Yeah, that even today the prices are slightly getting.
So is it possible to estimate by when they will come back?
It's very difficult. That depends upon the overall international market, the situation in China, the overall agricultural output, how it goes, the government policy. And if they give some PLI, then probably it will be better, but the government is not yet considering any PLI for agrochemical sector.
Okay, and this fall is like across portfolio, right? All products. Are there some products that are
almost all products. We are not the only ones. All agrochemical technical manufacturing companies may be feeling the same thing. And you might have seen the results of so many companies. More or less, we are also in line with them.
Yeah. Actually, I saw the results of few, but some were doing good. So I got a little bit confused there. So okay, fine, no problem. Okay, thank you.
Thank you.
Thank you. We have one last question. We take the last question from the line of Bhavin Chedda from Enam Holdings. Please go ahead.
Yeah, good afternoon. So a few questions. First, I think as you mentioned the 17 crore impact, you have said that across a few products. I just wanted to understand that since you have a product portfolio of more than 12-15 products, so where and majority is fungicide and herbicides. So does that both the segment were impacted by pricing power or few large products were impacted? How to understand what's exactly happening to our overall portfolio, if you can give some, because last 3-4 quarters the overall margin guidance has been coming down and we have been not performed in line with the overall guidance and expectations, because the margin has been coming down since IPO from 30 to 33% to now 13%. So what has gone wrong, and particularly for this last 3 quarters, and what has exactly happened in this quarter, because 10% margin dip is a very big number. So if you can elaborate more.
Actually, the price reduction or the inventory loss what we have taken, it is in new import substitute products launched last year. They are mainly herbicides only. So we have taken a hit. As regard margin decline in recent year, earlier we were having very few niche products, but the market size of those products that has got saturated or very low, they were on very low growth path. So in order to achieve expansion, we have launched 8 new molecules, but unfortunately these molecules, these were mostly import substitute products from China, and there has been sudden price fall for these products. So margins have been declining in our new products.
So you are saying these are mainly the new products which you launched in last 3-4 quarters, where the expectation was that your realization would be roughly higher than your historic realization of 350-400 rupees, but you have not got that number because the parity price is much lower.
Right. Yeah. This is on these new molecules on inventory and margin reduction.
Okay. And what has been I understand the pricing which is not under their control. So what has been the volume growth and capacity utilization of your capacity, since you have been continuously increasing capacity also? So if you can give some guidance how the volumes are performing?
Capacity utilization has been low in this quarter. It is slightly more than 50%.
Right.
We have increased capacity by much, and our some earlier products, they had lesser demand in international market because of this weather condition and inventory destocking in Europe. So the capacity utilization has been less this quarter.
This quarter it was less, but now coming quarter it will improve again.
Now July month is already over and you will have August visibility. So is it improving as compared to quarter 1?
It is improving, sir. It is improving.
Right. And this quarter, sir, I missed out if you have given, what was the export and domestic number? How much was export as a percentage of overall sales?
Export sale was 84 crore and domestic was 117 crore. So export is around 42%.
42%. Okay. So both have declined. I'm just saying on a quarter-on-quarter basis. So roughly both have declined as compared to domestic has gone up, but export has declined on quarter-on-quarter basis.
Export has declined a bit, sir. Yes. So domestic is more or less same.
And pricing pressure and the inventory write-down, what you are seeing is more on the products which you sell in domestic market, or even your export, this 84 crore sales, what you have done, you faced margin pressure on that also?
Right. This margin pressure on exports are not very much, sir. Majority it is for the domestic sales.
Majority for the domestic sales.
Yeah.
Okay. And again, you said majority was for the herbicides which were launched. So fungicide portfolio is doing fine right now. You're saying herbicide is the place where you faced majority margin pressure.
Herbicides and few insecticides.
Okay.
Yeah.
Okay. Thank you. Yeah.
Thank you.
Thank you very much. That was the last question. I would now like to hand the conference over to the management for closing comments.
Thank you very much for your participation. For any further queries or clarifications, please do get in touch with our investor relations team. Thank you. Have a nice day.
Thank you very much. On behalf of Dolat Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.